production. The thing about uranium is that like what used to be the magic number of $60 per pound is probably what, $75 per pound nowadays. That would actually spur new production. And you look at companies nowadays, you look at, any sort of capex that's 2022 or 2023 even, and you're kind of scratching your head going, okay, like it doesn't really matter how rich the resource is. This is going to cost a lot of money to get it out of the ground. And I don't think production is going to come online massively for a good number of years yet.
Hello and welcome to Capital Cosmos, everybody. Today we have a very special and returning guest in Fabi Lara. Fabi, thank you for coming back on the show.
What's up, Daddy? It's my pleasure. How are you?
Pretty good. In terms of what being up, I think we can all agree it's the uranium price at the moment, but we can get to that in a bit. But before we get started,
the only thing.
yeah. Before we get started, though, nothing in this video is financial advice. I am not a financial advisor, and neither is Fabi, so please do your own due diligence. All right, so Fabi, number one, thanks for coming back on. We really enjoyed the episode last time. But for those who may have missed that episode or who may be coming across your work for the first time, kind of give us a brief intro in terms of who you are, what got you into investing, what got you into resources, etc.
Sure, no problem. So today what I do is I write a daily newsletter called The Next Big Rush, and anybody can go and sign up for the free newsletter. There's no paid version as of yet, so enjoy it while it lasts. It's basically a what happened in mining today kind of newsletter. Instead of just going out there and trying to figure out all the different pieces of news and geological news releases that come out, you just go to one place, you receive it in your inbox, and you take a look at what's interesting, what's not. In 3 to 5 minutes, you're done, and then you can get on with the rest of your day and your speculating life. But how I started is I bought silver at the top in 2010, 2011, and saw the price of my little precious coins going down precipitously, and realized that maybe there's something to the story that I haven't quite got yet. And then I started to look into investing in mining. I was young and stupid at the time, still like to call myself that every now and again, because, with high appetite for risk, you end up having to deal with a lot of different nuances in your mind of what you should do with your money, what you shouldn't do with your money, how to, manage your risk. And back then it was just like, okay, I have a little bit of free money from my business, so let's just see how much money I can make. And in hearing that the miners had more leverage than silver price, then I thought to myself, okay, why not? This is money I can afford to lose. Let's just see where it leads me. And then I started to invest in gold, silver companies, uranium companies, etc. Not long after that, I started to make videos about it and just basically pass on the information, what I saw happening in the space, what I was learning, the mistakes I was making. So I'm very open about, some of my mistakes and the things that I get wrong and what I'm seeing in the market. But mostly I try to tell people of how they can play the market in a way that goes beyond just looking at a project in a company. I think a lot of the market participants, especially nowadays, they're extremely technical, and you have to remember that you're competing with some of the best geologists in the world when you're looking at any company. And so because I know I have no desire or interest in becoming a master, geologist, I don't try to pretend and sell that idea to people. What I try to do is play the market and try to show people like, look, this story makes sense, and these are the people that will buy into the story. So if you want to buy now, it might be a good idea. This is what I'm doing now, and then you can do without, do whatever you want with that. That's the take that I try to, bring to people. And I think that the best thing in the world is when you talk about a stock and, a few months down the road, or maybe a couple of years down the road, somebody writes to you and says, I made a triple on my money. I made 5 times
Nice.
on my money. Thank you very much. That to me is what keeps me going for sure. Like there is nothing better than that. And a lot of the times, like people get better results than I do. I'm a horrible market timer. I don't know when to sell. But yeah, that's what I do now. And obviously, I'm very biased in everything I say. I tell people, understand that everybody is biased to a certain extent. And because I am a marketing consultant to some of these companies, what ends up happening is that I say, like, look, this is a sponsored company, take it with a grain of salt. However, there are times when I hold a position in a company that's large enough to be uh, to make me more biased towards that company rather than my own sponsors. And so just to bring it back, to what I just mentioned, everybody is biased. Everybody's talking their own book.
100%.
And it goes back to what I tell people, like this is mass psychology 101. You have to understand that when somebody gives you a hot tip, they're already into that play. They want you to be the next guy who's buying their stock to bid it up exactly so that they are proven right. So yeah, be skeptical of everything, but also like if you like this business, if you like this market and you're a young person, like this is the best time to get in on it because like the market's crap and that's when you can make your bets and make the most amount of money.
Interesting. So, one thing I want to point out is mining, getting into the mining business or mining investing and stupidity can sometimes be synonymous and go hand in glove. So, we're all kind of in that camp, at some point in our mining investing, I guess, ventures.
Yeah.
But it seems like, I think what you're trying to kind of communicate is really finding a story, connecting dots, really synthesizing multiple disciplines into one narrative is kind of like your edge. Is that correct to say?
Yeah, probably. And I think that a lot of it has to do with the fact that when you're talking about commodities in general, right? This could be literally from lithium to oil. You're talking about supply and demand. And when you're talking about supply and demand, you're talking about just the commodity. That's one thing. But what people don't realize is that unless you're buying the commodity itself and you're buying stocks related to the commodity, then you're at least one step separated from that commodity. Now, there are some people who are buying, gold stocks, lithium stocks, uranium stocks that don't have the actual commodity in any sort of quantity. And so every time that you buy a company that's supposed to represent that commodity, you're stepping out from that thesis. And then that actual stock has its own supply and demand story, right? For instance, this is classic in junior mining. Junior mining is essentially a race between dilution and value creation. This never changes. So while the company is trying to build value, you're trying to ascertain how much money they're going to spend to create that value and how much they're going to dilute your position by in order, to get the price to go up, so to speak. And that race is tough because they could be diluting. All of a sudden, they surpass that curve, so to speak, and they create so much value that it was worth you being diluted for so long. And sometimes it's not worth it, right? And so when you're buying a stock, you have to ask yourself, okay, what is the supply demand story for this particular stock, not just the commodity that's related to them? And that's something that can be easily forgotten. And I think that sometimes, like, I'm preaching to myself. Sometimes I forget about that and look at the commodity, and I get so in love with the commodity that I forget to look at what's happening to the paper.
Got it. Yeah. So, I mean, people can easily fall in love, and especially if they buy in early. That's one thing. It also depends on when you buy into the market. Rick Rolls, often says that being early is often akin to being wrong, because if you're too early, you might be correct on the supply and demand story, but if you're too early, you're going to have to endure a ton of dilution until you get to that point where you just see the big speculative boom in that particular commodity. So, really good points there. What would you say you're most bullish on in terms of your portfolio at the moment across the commodity space?
What
Like
am I
sector
most
sector
bullish
wise. It
on?
doesn't have to be like a particular name, but just sector wise.
Oh man, I'm bullish so much. So I'm going to excuse myself from commenting on lithium because it's something I don't know enough about to really make any educated comments on. And I think that it's a dynamic enough market that you really have to understand it. You really have to dedicate yourself to understanding it, akin to uranium. Now, uranium is probably the stuff I'm most known for. People call me a uranium expert. I'm far from it, but I'll take the compliments. I would say that uranium is probably my most bullish bet when it comes to the commodity itself, by far. So between that, gold, copper, silver, you name it, I truly believe that the price of uranium itself must absolutely appreciate in price. That is my bet all day long. When it comes to the equities related to that, when I look at uranium stocks and when I look at gold stocks, to me, looking at just today's value, I like gold better. And this is probably going to come as a shock to a lot of people who, listen to what I put out and what I talk about, mostly uranium. We're making bets that the price of uranium is going to appreciate quickly enough that the equities are not going to have to dilute so much and actually catch that bid. I do believe that. And most of my holdings are still in the uranium space. But when you look at present value, what they have in the ground, what they're producing, what they're about to produce, etc., you look at any, there's a number of different, gold developers that you look at, and it's undeniable that they're extremely painfully undervalued. So my bet today would be stock-wise, absolutely gold stocks.
Yeah, and I just want to show you this really quick. So this is GDX versus gold. And look how cheap it is. We're sitting right down here. Can you see my screen?
That's ridiculous. I can, yes.
Yeah, so this is, the miners are extremely undervalued relative to the
That
actual
is
price.
so cheap. That is so
Yep.
cheap. Yeah, and the thing with gold is that it's boring, but it's maintained a certain level for so long. Nobody would have bet that gold would be trading sideways for as long as it has. Everybody had this expectation that once it crossed 2000, it was just going to go to the moon, etc. And there were, different people talking about it. It either pierces it, goes to, 2500 and up, or it's going to trade downwards for quite a bit of time and depreciate. And it hasn't done either. It's just gone sideways, and companies are just sitting there going, okay, we're trying to get our financials in order. We're trying to guess what the future price of gold is going to be to see if this deposit is worth anything or not. And a lot of them are coming up with numbers that are current, so they are adjusted to today's inflation numbers. Yes, granted, capex is a little bit out of control for everything in mining right now. So let's set that aside. But when it comes to, all-in sustaining costs and things of that nature, and, the possibility of selling gold at, 1600, 1700, etc., I think companies are coming out with great numbers, not betting on the price of gold going up, which is different to what uranium companies need in order to even, come back to production. The thing about uranium is that, like, what used to be the magic number of $60 per pound is probably what, $75 per pound nowadays. That would actually spur new production. And you look at companies nowadays, you look at, any sort of capex that's 2022 or 2023 even, and you're kind of scratching your head going, okay, like, it doesn't really matter how rich the resource is. This is going to cost a lot of money to get it out of the ground. And I don't think production is going to come online massively for a good number of years yet.
Yeah. Yeah. So if I were to give you, let's say, like $100,000, how would you allocate that capital at the moment? Would you buy T-bills? Would you buy more, I guess, like
Heck to
big
the no, I
stocks?
would not buy T-bills. My risk appetite is too high
Yeah.
for anything that's safe, but probably I would probably allocate at least half of that to a mixture of gold and silver developers. So
Hmm.
usually companies with some sort of resource, If I can name names, this company is one that I've never worked with. I don't have a working relationship with them, but I think that what they have been able to do, even through COVID, is just nothing short of extraordinary. A team that has actually, done it before and got amazing, billion-dollar results is Montage Gold. So they
Montage.
have, yeah, they have projects in the Ivory Coast, I believe, and it's not super high grade, but they can still mine it at a cheap enough price that their feasibility study is, above $1 billion NPV. And when you look at their market cap, last time I checked, it was like 140 million
Right.
versus an NPV of over $1 billion.
How do you spell that?
So
Montage?
is
You know?
the ticker symbol, I think, is a MAU. So it's MONTAGE, Montage Gold.
Well, montage. Let's see.
Yes. So right now, dang, it's even cheaper. It's 101 million. I don't know if this is up to date, but on co.ca it says 101 million Canadian. And these guys, they have a very decent resource. It's not super high grade, so it's not sexy. Here's the thing about some of these stocks. If you don't have a really long intercept or a really high grade intercept, sometimes you don't catch, the hot news wires. And so you're, just drilling away and figuring out, delineating your resource, and you have really good geological teams and engineering teams, and they're figuring out that, like, they have the goods. Right now they're working on higher grade areas of their projects, and so this project is only getting better and better and better, and they're right now standing at, a good 10% of what their project is worth on an NPV basis. Like, I can't really find that type of setup in anything outside of gold right now. So it's impossible for me on a purely numerical basis to tell you there's anything cheaper, than some of these developers in the gold sector.
Interesting.
Even
Yeah.
though I love uranium, don't get me wrong, I
Yeah.
still own a lot of it. It's going to go up. And the story in uranium is more hyperbolic. A lot more people are going to throw a lot more money in uranium without really thinking about it, and it's going to explode in price and things are going to go up. And it kind of goes back to, there's a question that mine just threw up on Twitter, and he asked, what company do you honestly think is going to 10 times in this next bull market? And another good buddy of mine, Rodrigo Costa, answered, likely the companies that are just as likely to go to zero. So it's kind of all or nothing. And you're probably, going to risk money that you're okay with losing. But when a uranium bull happens, it's absolutely violent. And the way that the spot price is already moving is telling us something for sure.
Yeah. So what would you do with the other half? So you said one half of that 100,000 go to gold and silver developers. The other half would go to.
The other half would probably go to uranium. I'm not going to get fancy and say a little bit of copper here, a little bit of, something else. Copper, I like in the long run, but copper is such a large market. I almost feel like it's almost like predicting macro, factors. Like, there's so many things happening on a macroeconomic basis that I can't tell you what inflation is going to be next year. I can't tell you what interest rates are going to be. In the same way, it's very hard for me to guess where copper is going to be. We do know for a fact that a lot of copper producers are struggling in many different ways. And so you can't tell me that this is a really hot, bubbly market for copper. We're probably closer to an intermediate bottom than we are an intermediate top. So based on that, I'd be getting ready to eventually buy copper, but not right now. And in the uranium camp, if people don't really know enough about uranium, and let me actually qualify that. If you're not willing to keep up with the news of uranium companies or mining companies on, you kind of a daily basis, because that's how quickly the market's moving nowadays, I would just, buy an ETF or something like that. With gold, I'd pick developers over anything else, but for uranium specifically, I would just get an ETF and then be done with it. You get a little bit of producers, developers, explorations, and so it's better that way because you're not too tied up to one story. I mean, look at Niger. I was literally shaking hands with the Minister of Mines of Niger at PDAC, and everything seemed on the surface to be going amazing. And now they literally are no longer. They're no longer in power. Things can change really quickly. And I still think that those companies can really have legs. And so I would be careful with trying to concentrate it too much on any one jurisdiction or story.
Yeah, I know you're not a geopolitical analyst or anything like that, but what's your kind of take on GoviEx and Global Atomic at the moment? Do you feel this is kind of, this is going to be like a sustained downturn, or is this kind of going to subside eventually?
I think that the biggest problem right now is because the coup happened in a way that investors did not see it coming whatsoever. It's going to take some time for institutions to come back to the table and be able to really finance these projects at a decent level. I'm just guessing. I'm hoping to the contrary, but I'm guessing that from an institutional point of view, I mean, they don't have the appetite or the incentives that you and I have to just, make a double, triple, or 10 bagger or whatever. So I do see retail coming back to both GoviEx and Global Atomic very quickly. In fact, if you looked at the charts right now, especially of Global Atomic, I said, don't count them out about last week. And by pure luck, I think I nailed the bottom. It's not that I knew anything
Nice.
special, but I didn't buy, I still hold, I didn't buy anything extra. I should have, but it's been trending upwards. Now, obviously, as I say that, we probably had a down day, I think, yesterday, but we reached like the precipitous fall there. And then it's a bottom, it's probably a double bottom down there. And it hasn't really reached that level since. And so thing with both of them is that they're, mid to late stage development companies. Global Atomic was very close to, getting to their last stage of development. And the stage they were at was financing. Now, they had an issue with financing before, which I believe made them cancel, like $100 million worth of financing, and they were going to restructure it, etc. Then the coup happened. So it's really very, very unlucky for the company. But when it comes down to it, we're talking about mining. Everything that can go wrong will go wrong. And the asset's still there. It is, I believe, the highest grade asset in Niger. It's the one where if that doesn't make money, then nobody else in the country makes money. It will come to production at some point. It's just a matter of figuring out how can they finance this and not dilute the company into the ground because the price, has been hurt so much from this crazy coup that happened. And a transitioning period is not easy. It will take a lot, I think, for institutions to look at what's happening politically and feel safe that their investment isn't just going to magically evaporate. So that's my uneducated blind guess.
Right. I want to kind of take this back to gold and silver versus uranium. I know silver stocks, especially the silver developers, they tend to have really explosive upsides. How do they compare to some of the uranium equities out there? Are they comparable, or does uranium still take the cake?
I would say they're